So you're interested in a reverse mortgage, but then it occurs to you, how do you qualify for one? Welcome back. I'm Alvarez with MortgageWorks, where we have the answers and they're on the house. Today we're talking about how do you qualify for a reverse mortgage? Let's get into that. The first thing to talk about is eligibility for a reverse mortgage, which is a little bit different than qualifying. To be eligible for a reverse mortgage, you have to be at least 62 years of age or older. Keep in mind, the older you are, generally the higher the loan amount you're going to get. But what happens if you're married and you have a spouse who's under 62 years of age? Can you still get the reverse mortgage? Are you still eligible? The answer is yes.
Yes!
A married couple can get a reverse mortgage even if one of the spouses is under 62. The key is that in that circumstance, the loan amount will be determined by the age of the youngest borrower. This helps ensure that the loan will not grow too fast relative to the increase in value of the home. So that's eligibility, but how do you actually qualify? Well, the key thing to understand, and this is a benefit of a reverse mortgage, is you are not subject to traditional credit qualifying or ability to repay qualifying that is done on first mortgages. What I mean by that is you're not going to be subject to a debt-to-income ratio, and you're not going to be subject to any sort of minimum credit score. But what will be done during the loan process is you will be subject to a financial assessment. The purpose of that is to determine if you have sufficient income and/or liquid assets to be able to maintain and pay on a timely basis property-related expenses, such as property taxes, homeowners insurance, HOA dues, and maintenance and repair requirements for the home. Now, what happens if you are determined not to be financially able to cover those property-related expenses? Well, then what happens is the reverse mortgage will include what's called a LISA. That stands for Life Expectancy Set Aside. What this means is a determination will be made if you can financially handle property taxes, insurance, HOA dues, maintaining the property, repairing it when needed. And if it's determined that you may have trouble doing that, when the lender makes the loan, they're going to pull out some of the proceeds, set it aside in a LISA account. It's kind of like an impound account. And from this account, the lender will maintain payment of the property taxes, homeowners insurance, etc., to make sure that those are covered, and that will allow you to stay in the home without any obligation. So the idea with the LISA is to make sure that the property-related expenses are being covered on your behalf from the loan proceeds. Other than that, there is really no other qualifying criteria to meet. Again, you don't have to meet a debt ratio. You don't have to have a minimum credit score requirement. Once you're determined to be eligible based on age, that's pretty much it. You're eligible for a reverse mortgage. But if you want more details, my information's on the screen. Give me a call. I'll be happy to sit down and discuss with you eligibility and qualifying for a reverse mortgage. I'm Alvarez at MortgageWorks, where we have the answers and they're on the house.